On to the show.
Welcome to Profiles in Risk. I'm your host, Nick Lamparelli. I am sitting in Naples, Florida, and I'm pleased to introduce Patrick Schmid. Patrick is Vice President of the RiskBlock Alliance, a blockchain insurance consortium at the Institutes. Patrick, welcome to Profiles in Risk.
Thank you very much for having me.
So, when I first saw RiskBlock come up, the biggest thing that surprised me was that it was being sponsored by the Institutes. And I've always thought of the Institutes as, the place where you take your CPCU exams and your ARM exams and things like that. How was it that blockchain got on their radar?
That's a great question. So again, thanks for having me. Well, for the Institutes, as you can imagine, our goal is to educate the insurance industry and provide knowledge solutions for the insurance industry. So one of the way that blockchain kind of came about was through some of our existing research, honestly. I was working for a department within the Institutes called the Enterprise Research Department, and our goal was to monitor market trends, provide some marketing analysis as well. But one of the key roles was to monitor market trends. And one of the things that we've noticed in the industry is that the industry is changing. I think everyone knows that technology is most likely going to lead to changes within the industry. And, if you look at Bureau of Labor Statistics data, it shows that the industry most likely will go through some changes, particularly, in terms of positions. One of the things that we noticed from an institute standpoint was that careers related to data analytics look like they're going to expand over time. And some of the more traditional careers might remain, stagnant in growth, maintain their current status, or in some cases may even shrink. So we wanted to kind of keep our tabs on that and make sure that we're following our mission as a not-for-profit to provide knowledge solutions to the industry. And in doing so, personally, I've been very, very interested in blockchain technology since I heard about Bitcoin back in probably around 2011, and kind of been following it ever since. I'm an economist by background, so that really fascinated me. I didn't really see a connection with insurance until about 2015, and at that time I was working in this enterprise research department, and it became pretty apparent to me that there was a need for, at the very least, some thought leadership in this area. And we had some conversations internally at the Institutes about how to go about that. I had the pleasure of being able to kind of provide that for the Institutes, and met a lot of folks along the way, learned a lot, and had some internal conversations about what we could do. Made a recommendation to our senior management team to consider starting a blockchain consortium. And basically one thing led to another, and here we are today. So it really was started from us looking at, industry trends, thinking about it in those terms, and then thinking about how the institutes could really help with this transition that the industry is going through.
You brought up Bitcoin, and I think that unnecessarily confuses a lot of people. I have a group of insurance professionals online that, we throw questions back and forth. I would say we went a good year where someone would talk about blockchain and I would say, I just don't get it. Are we expecting the insurance industry to pay claims in Bitcoin? What is going on here? I just didn't see how the underlying technology could be useful, because I always linked it to the cryptocurrency side of things. And so could you go into a little bit, what the differences are, and we could try to pull the Bitcoin from the blockchain technology apart so that folks can really focus on the blockchain element and how it benefits insurance?
Yeah, I think that the first thing, I think you're right on. I've run into the same thing that A lot of folks that are kind of learning about Bitcoin and blockchain, they assume that Bitcoin is blockchain or vice versa. And the truth is, that's really not the case. There's thousands of different cryptocurrencies, each of which generally have their own blockchain. And that's just the public blockchains. Then there's private chains and all sorts of other things. So blockchain's really the technology behind Bitcoin. Bitcoin started out as a goal of a peer-to-peer payment system. Really revolutionary, doing some things that were very, very different than other traditional attempts at digital payments. So, Bitcoin was a peer-to-peer electronic cash system, and basically underneath Bitcoin was this system, and that system is the blockchain. So that's kind of how I see them as differentiated. And the truth is, for me, I was, as I mentioned, I was really into Bitcoin, but I did not see, kind of similar to yourself, real application in the insurance industry, paying in Bitcoin and that sort of thing. Maybe there's some sort of application there, but nothing besides that initial use case. Because quite frankly, what Bitcoin is one use case of blockchain technology for payments. That's it. Blockchain technology has a lot of potential outside of that. For me, it really clicked when I learned about Ethereum. And Ethereum, more specifically about smart contracts. Ethereum is how I learned about smart contracts, but Ethereum has a goal of basically becoming this world computer. And they utilize these smart contracts, which are basically, you can think of them as if-then type statements that are burrowed into a blockchain. Those if-then statements, if this occurs, then that. If you can imagine that being burrowed into a blockchain that provides a sharing of data amongst varied parties, that has huge ramifications for the insurance industry. It's one of the reasons that we here at the Institute started to kickstart this RiskBlock initiative, was because we do see that smart contracts have a lot of potential in the industry. But I agree with your overarching point that, it's often thought that Bitcoin and blockchain are the same thing. It's good to separate the two, to provide advancement in these sorts of discussions.
I remember the moment vividly. It was in 2017 where the light bulb went off in my head, and I said, "Whoa! Oh, I get it. I see it now." And I was having a conversation with a company that was partnering with mine, and we were talking about a blockchain backbone. And there was a lot of conversation going back and forth, and then all of a sudden I realized, oh, wait a second. In this blockchain, we can keep track of, for example, I'm in Florida now. We can keep track of who was the contractor that fixed the roof after Hurricane Irma. We can keep track of what was their insurance, what were their limits, what was the policy number. And all of a sudden, it was like a squirreling tree or a network. I just saw all of these vivid opportunities where you can all of these contributors can come in, put their data in there. It's it's fairly decentralized, and like what you said, it increases the ability for insurers to share information. That was the first inkling where I thought this is going to have huge ramifications. This is because I started to see all kinds of valuable sources. So I want to rattle some off to you and see whether I think I know what your answers are going to be, but I want to rattle some potential uses, because I really want to try to convince the listener here why you're doing what you're doing. Well, why would the institutes spend so many resources to try to get this going? So the first one I think of is loss runs. Could you talk about like the benefit of a blockchain just in how insurance agencies, brokerages, insurance carriers, reinsurers, the whole ecosystem, how that would simplify just the loss run element of sharing information?
Yeah, absolutely. And before we even get into the specific examples, I think it's good to kind of to back up and try to provide an overarching definition of what blockchain is. To me, it's I really like how the Economist magazine dubbed the blockchain the trust machine. So if you really think about it, formally a blockchain is a distributed database or it's a shared ledger, and it has these lists of records that are called blocks. And those blocks and the data within, which could be transactions or could be smart contracts, they're verified or they're confirmed through this process that's called mining, generally mining, although there are other consensus processes associated with it. But the purpose here and the real key is that it removes the need for intermediaries to validate. And that's one of the things that Bitcoin did, peer-to-peer, you don't need the banks or the Federal Reserve in between when I'm sending, in that sense, money from one party to the next. I think that's important to distinguish out, as an outset, is to try to talk about why it's the trust machine. Why do they define it as the trust machine? Well, basically, you don't need those intermediaries involved anymore. You can provide a way of sharing information across the board. So to more directly to your question about day-to-day aspects of insurance, specifically loss runs, which are reports provided by your insurance company that document claim activity. What we can do now with blockchain technology is we can share that information in a relatively secure way amongst interested parties. What I really get excited about when it comes to blockchain technology is it provides a means for cooperation, which I don't even know if that's actually a word.
I love
but
that.
I think you get what I'm it's like,
that's fantastic.
But it's really, we need to cooperate with one another. And if you take a step back on why, the example of loss runs is an excellent one. But why is it that, we can start rattling off use cases? It's because, quite frankly, the industry right now is in, it's a low interest rate environment. Organizations are looking for ways to remain profitable. And, doing that on their own might not necessarily be as possible as doing it as a group. And the organizations all could collectively work on universal problems, like, transmitting information from one party to the next. Loss runs are a great example of that, where the industry can cooperate and potentially lower costs across the board. Therefore, everyone gains, the consumer, the industry, even policymakers and regulators. So I agree. Loss runs are a great example. Basically, any way that you can trade information of what's occurred, blockchain provides that shared ledger for that information to be exchanged amongst permissioned parties. To me, like what blockchain is really doing is it's combining a database with a network through encryption to provide advancements in transactions. So you can think of Bitcoin there, or computing. You can think of smart contracts there. And basically, it's providing that means to that database. And, you have these parties that would be involved in this network. And the encryption is going to keep it secure, so you can provide permissions from one party to the next. Only the interested parties that are involved can be granted access to that shared ledger. It's exciting thing. It's exciting stuff when you start thinking about the implications. And I think you've done a great job of identifying some. Loss runs is one example, but I'm sure you have others, right?
I do. And I specifically brought up loss runs because I'm dealing with that now. We go back to the broker and we say, before we can proceed, we need loss runs for this account. So we get loss runs. I got 1 year. When we went back to the broker and asked, why did we only get 1 year? It's because they only had the account for 1 year. And for us to get more years, we'd have to go to the other broker. We'd have to figure out who the carrier was. It's a nightmare. We basically just said, we don't have time. We gave up. And that was like a use case that popped up in my head, as the owner.
So the immutability?
The insured should have a blockchain containing all of their insurance information. And then they grant the key. And the key opens up, opens up the gates that allows you to see all of the insurance activity, not just the loss runs. But that was one of them. The other one that popped up as well is certificates of insurance. Just because if you're an agent listening to this podcast, it's a nightmare. It's a nightmare dealing with certificates of insurance. They don't even actually mean anything. And so we spend a lot of our time kind of churning through that. Would you also think that that was an appropriate use case?
Absolutely. A blockchain application could provide the ability to place, like you said, policyholder information. You could place it on a blockchain as a real-time repository. And basically, like you said, via keys, you can allow permission to access and verification to those who are deemed appropriate. In this case, could be certificate holders. And all coverages and changes would update automatically across the board. So, the document updates, everyone would see those updates rather than having potential for reconciliation issues and that sort of thing. Including additional insureds, exclusions, endorsements, cancellation notices, all the above will be updated on this shared ledger. It has huge ramifications for certificates of insurance. Loss runs are another example, but there's so many. Actually, that's one of the challenges that we're facing. I know we'll get into RiskBlock a little later, but is prioritizing all the ways in which you can use this technology within the industry.
Yeah, we will get into RiskBlock. I think it's probably important to set the record straight when it comes to what blockchain is. And you brought up,
Sure.
Granting access. Folks that are listening to this are immediately going to think, well, that can be hacked. Talk about what's so very unique about blockchain technology that makes hacking, I won't say impossible, but as close to impossible as technology can provide. Talk about that side of the technology.
Well, I'll talk a little bit about at least from a public blockchain standpoint, because I think that helps. When you think about this mining activity, again, you think about this trust machine that blockchain provides, and the miners are kind of the parties behind the trust machine that are incentivized to solve cryptographic puzzles and basically be granted new currency. In the Bitcoin world, that's Bitcoin. So, folks who typically question this, they start to say, it's possible that this could potentially be hacked. And of course, that with anything, that's a concern. But it would be really challenging for that to actually occur. The way that this mining system works is you have this immutable ledger. So you imagine that you're on block 100. And there's all these transactions within block 100. Every 10 minutes, a new block comes down, and the transactions within are verified by this mining process. There's encryption associated with it. So you're at block 101. The blockchain is block 101, block 199, and all the way back to the Genesis block, which is block 1. In order for someone to basically rewrite that immutable, keyword immutable ledger, meaning that anything that's written to that ledger is permanent, they would have to own 51% of the mining network. And even if they did own 51% of the mining network, they would have to slowly start the process of rewriting history. Because of that, Bitcoin and other blockchain technology is extremely difficult to hack. And it's much different. Risk management teaches us about, centralized locations and the risks associated with storing your information in one location rather than kind of having it dispersed. And blockchain technology is a great example of that, where everything is decentralized. So the only way to really rewrite this would be to own all 51% in that case of the mining aspects. So I would say that blockchain technology is extremely secure. There are some challenges associated with blockchain technology, however. I think one that I was chatting with someone yesterday about was GDPR compliance, and thinking about, Bitcoin is just transactional information. But when you're talking about things like, some of the use cases that we've already covered in the insurance industry and some others that you can imagine, which may involve something related to personal information. GDPR is basically a European regulation that one of the things that it involves is the right to be forgotten. So one of the challenges that blockchain technology faces right now is, how to separate out what could be stored on that immutable ledger while still living in the world of regulations, things like GDPR compliance, where you're not necessarily going to want to store personal information on that. And once you start to look into, how you would store that personal information, whether it's off-chain or whether it's still on-chain, but you're using some sort of unique identifier to hash and store on the chain, that reflects back through an API connection to the more personal information, that can solve that GDPR compliance issue. But there are challenges like that as we work through this to try to figure out, what's the best way to store, what data should we store on the blockchain, what could be leveraged the most. In general, though, I think that it's pretty difficult to hack blockchain. It's much easier to hack a centralized database.
Risk management 101, you get that. Decentralizing fixes, so pretty much solves that problem. I see another potential benefit of decentralization, which is you were talking about miners. I was thinking of how it's, for different insurance transactions, as stakeholders come into the chain, they also have the incentive, the incentive of making sure the valuation is correct, the incentive of making sure other valuable nuggets of insurance information that they're participating in is correct. And I almost feel like they're part miner as well. They're contributing to the chain in a way that makes the chain, I guess you could say, robust. I think I prefer anti-fragile. The more stakeholders that come in with disparate interests in the particular insured asset, the more likely you're getting closer to one proper valuation. The stakeholders coming in after can feel more confident knowing that there are all of these other stakeholders that also have an interest over time, and they have kind of confirmed some of the insurable aspects of the different asset. So I'm curious. I'm going to step into RiskBlock next, but in terms of like mining and that kind of data decentralization, do you think there is value in just having stakeholders participate purely?
Yeah, I think that the really interesting thing is, I go back to that original definition here of thinking of this as blockchain as a database that combines a database or a ledger with a network through encryption. And, that's going to provide the advancements in payments and computing. And the reason I think back to that is the network part of this is extremely important. I think that's what you're getting at. How many stakeholders do you have involved? How many network participants do you have involved? Quite frankly, when you look at other networks like social media, social networks like Facebook, there's not a lot of value in Facebook if you are participating in that network by yourself. But once more and more people participate in that network, there's some social value associated with it. And in a sense, that's similar to blockchain technology, where you have this network aspect. And the more stakeholders are involved, in a sense, to your point, the more likely it is that the data is accurate. And that's one of the cool things about what some of the public chains are doing, is they're really starting from a real holistic, more of a consumer-oriented perspective. I think what's unique about some of the private chains that are coming out is more of a B2B perspective. Either way, though, I think, the more stakeholders involved, the more the network grows, the more important that particular initiative will be, and the more credible the data within would be as well. So I'd agree with you there.
How is RiskBlock different from Ethereum? B3I is the other insurance collaborative that I've heard of. So why does the industry need another potential platform for collaboration?
Well, that's an excellent question. So I think the first thing to do is to start out by saying, you have Bitcoin, you have Ethereum, you have Litecoin, you have all these sorts of public blockchains, right? And they're very, very different than what R3 is doing with Corda, with Hyperledger is doing with Fabric, what B3I is doing, and even what RiskBlock is doing. So, on the one side you have the public blockchains, and then over on the other side you have kind of enterprise usage. When we first got involved in this, we were one of the founding members of the Enterprise Ethereum Alliance. And what they're doing there is they're trying to provide some sort of standardization of usage of Ethereum within the business context. Similar is Hyperledger. Hyperledger is a bunch of diversified players that are coming together to try to figure out some sort of way of leveraging blockchain technology. In the banking industry, they have R3, which I think they have about 80 banks or so that are involved in using distributed ledger technology. On the insurance side, it's interesting because when we started to look into this and talk about it internally here at the institutes, we were talking about it and starting to launch what we were launching right when B3I launched in Europe. And we've been in conversation with B3I about how we can mutually partner and collaborate and that sort of thing. So it'll be really interesting to see what 2018 will bring there. But there is some distinctions between all of what I just mentioned and what RiskBlock is doing. RiskBlock has behind it a not-for-profit that is industry-focused. So out of the other instances that I mentioned, the only one that is a not-for-profit, has a not-for-profit behind it is Hyperledger, as the Linux Foundation behind it. So that's unique. But what's different about Hyperledger is it's a cross-industry kind of consortium. What we're doing is an industry-focused consortium with an organization that has been around for over 100 years, literally teaches ethics and teaches different subject matter pretty much across the board within insurance. So we're very unique there. I think that that's important to note because we don't have a stake in the game. One of the things you'll see here as you kind of get more involved is there's typically, with each of these varied approaches, there's an advocate of one particular type of platform behind it. So, for example, with Hyperledger, they're trying to say to the community, look at Fabric. You should use Fabric, which is a platform to build upon. With R3, they're using Corda as their platform in the banking industry. Even Ethereum, there's varied elements of Ethereum. So the Enterprise Ethereum Alliance is trying to build Ethereum as the platform. And I think what we're doing a little bit different is we're saying we'd like to present the industry with an option for interoperability amongst different platforms. So that's why it might make sense to have a not-for-profit kind of behind you, because we're Switzerland. We don't have a stake in the game. We'd like to come into this from a holistic point of view. And one of the things we've been learning is that carriers, brokers, and reinsurers are building on varied platforms. No one knows who's going to win this race. And because of that, they're all building use cases on varied platforms. And we don't think that we know who is going to win the race. And therefore, on behalf of the industry, we want to provide a solution that can allow them to build on whatever platform they want and have an interoperability function amongst those platforms. So I think that's another thing that really separates us from some of the other industry players. The final thing I would mention is, the Institute serves over 100,000 unique students annually, and these students are professionals within the insurance industry. We have a network, and beyond that network, we have our board is comprised of 40 plus, generally CEOs from varied organizations, representing, I believe, around 60% of domestic premium volume and a sizable amount of international premium volume. So, point being, we were just talking about networks, and for a network to work, you need to start with a good size of folks involved. And we feel as though, we started this out in March of last year, And we started our working groups at that point. We started with about 15 firms involved, and it grew to over 40 firms involved by the summer. And at that point, the Institute was covering kind of the cost of development, proof of concepts, and so on. In late 2017, we asked members or potential members to put stake in the game, go through a formal legal process of membership agreements and so on. And now we're up to about 20 members involved in RiskBlock that are formalized. And we believe that that will continue to expand because of the Institute's reputation. So I think the network piece of it as well is a very, very important piece to kind of highlight in terms of how we're a little different from some of the existing blockchain technologies out there.
Are you saying that it sounds like RiskBlock is almost like a translational type of platform. Is it possible that for any participant creating their own or using a particular type of technology, is it possible that the network effects would cancel them out? Like if they're using one technology and the other stakeholder they're trying to work with or partner with is using another technology, that those two technologies may not be able to talk to one another, thereby minimizing the benefit of what it is that you're trying to do. And you're kind of in between coordinating the different technologies.
That's exactly it. I couldn't have said it better myself. I mean, that's the concern, is that if you have one consortium saying you can only use this technology and another consortium saying you can only use that technology, where is that really going to leave us? It's our opinion that we know the industry. I can assure you that Carrier A out there is building on all three Hyperledger variants of Ethereum and Corda. And they don't want to hear that one is the best solution and only one. Maybe one is the best solution for payments. One is the best solution for this or that. That makes more sense to them. And I'd agree with them there. And therefore, that's why I do think, a not-for-profit, we don't have a stake in the game. Our stake in the game is to serve the risk management and insurance industry. And that's why we looked at it from an interoperability approach, because we started to go down the path of thinking, okay, which one should we choose? And as we started down that path, we realized that there are potential pitfalls with that, which you just pointed out. What happens if, what are we going to say to all those carriers out there, or reinsurers that built on platform B when we chose platform A? And are we saying that platform B doesn't have some potential advantages over platform A? That sort of thing. So the interoperable approach is inevitably where this will all go. We've been talking to a variety of solution providers over the past week or two that were going to help us engage with RiskBlock. Folks like Deloitte, Capgemini, Accenture, IBM, and others. And through that process, it's pretty consistent that there's large-scale agreement that an interoperable approach is going to be what will win in the end. There probably won't be one platform, and that's it. There most likely will be a couple. And they'll grow into specialized areas. Like one platform might be really good for payments, another might be good for claims or something of that nature. So we want to remain open-minded and help the industry in that way.
So you're in early stages. How have you identified specific use cases that you think make sense, to test out the technology?
Yeah, we've gone through a process. Our existing use cases, folks may have seen in the news that we've gone through and we've brought to a beta form of production something related to proof of insurance. The idea that you could verify proof of insurance coverage on a blockchain. We also have use cases in a variety of other areas, including first notice of loss, transferring information, kind of like what we talked about earlier today. Claims activity and transferring that information from permission party to permission party. We also have a use case related to subrogation. It's a very manual process now. A lot of it can be automated using smart contracts. could even result in netting of payments, saving insurers quite a bit. Finally, we have a use case related to parametric insurance. For us, we were looking at business disruption, a weather-related event. Our typical use case is related to the food trucks. We use that as an example, going to a sporting event or something of that nature and providing insurance so that if there's a rainout and that individual bought inventory for that sporting event, there's some sort of coverage that's related to the zip code and the amount of precipitation in that particular zip code. And then there's an automated payout, potential for automated payout, I should say, related to a smart contract. There's a lot that we can do as an industry. I think one of the challenges is to figure out, the prioritization. One of the examples you mentioned earlier with certificates of insurance, that's a area of opportunity that has been brought up to us. But just to name some others, we've had conversations. I can quickly rattle off a few that our members have brought up. Fleet IDs, surety bonds, multiple payees, salvage. Real-time regulatory monitoring has a huge potential here. There's possibility for tokenization of different things like titles, deeds. You can utilize digital twins. We can start to involve the Internet of Things in blockchain technology. Agent broker licensing. Honestly, certificates, certifications and that sort of thing could also be used on a blockchain. I could continue on. The fraud register. There's so many potential use cases for blockchain technology. It's actually one of the challenges is prioritizing them. And we're going to need the industry's help to do that.
That's why I couldn't do your job, quite honestly, because as you're rattling those things off, I'm like, yes, all of them. They're all important. Let's do all of them all at one time. Let's just do that. But of course, that's not feasible. You have to prioritize. So, but as you're rattling that off, it's bringing back that moment again for me where the light bulb went off in my head, and I said, there's just a incredible swath of opportunity. There are bottlenecks of paperwork, data transmission. I do CAT in dealing with catastrophes. And the simplest example I give is that as a property goes through up the stack, from customer to reinsurer to capital markets, at every stage, every stakeholder and every participant is doing the same work. They're all verifying the data. They're all modeling it. Everyone's doing the same work. I think that's got to cost billions of dollars in friction and additional costs that get added to the system that blockchain can kind of simplify. And to me, that's the most amazing thing about this particular technology is that it's not disruptive at all. It's lubricant. It makes everybody's life in the ecosystem better. It's not pushing people out and making them jobless. It just makes the whole system function easier.
I couldn't agree more. I keep hearing that it's a foundational technology, but it's very interesting because the industry is going to have to kind of decides to step into that foundational technology and how are we going to rebuild, in a sense, some of the functions within the insurance industry that quite frankly don't operate effectively. And I think your example of different stages and everyone doing the same work is kind of exactly where blockchain technology can help. Having that universal ledger where this information is stored and permissions to provide that information and keys to provide that information to parties that are related to that specific instance is hugely beneficial. It's going to have enormous ramifications on insurance. And even if you look at it, we're with RiskBlock, we're really looking B2B. We're looking business to business. There's opportunity down the line to look B2C. And one of the examples that I think the World Economic Forum has on just the claims process as a whole for a consumer and how that could be improved. And I think Capgemini has a report out on just what smart contracts could do to auto insurance and auto insurance claims alone, saving, I think, $21 billion is what they cited, is the potential there. That if you start to add that up across the industry, the cost savings are enormous. it's really going to be, it's a really exciting area for the industry. And I hope that the industry starts to rally around this, because I really think we could reshape, we could call out some of the real problems in the industry. We could save the industry a lot of money in the process. We could make regulators' jobs easier, and we could make consumers happier. There's benefits across the board, so it's super exciting. But I agree with you. I mean, it is a challenge to figure out how to prioritize them. And I think our job here at RiskBlock is to help facilitate those discussions. But to your point, it's going to be the industry's job to decide. We're a member-led, industry-led organization, and we want the industry to make these calls. It will be a difficult task to facilitate those types of discussions, but I think that, you know, from what I've seen over the last year, the industry is up for this challenge. So it's very exciting.
How did you end up in this spot? You were a PhD economist, now pretty much entrepreneur, right? Creating a new market, you know, so to speak. And as I was doing research on you, you have YouTube videos teaching on blockchain. Can you talk about the path and how you ended up here? And yeah, I'm specifically interested on where there was a fork in the road and you decided, yeah, insurance. Let's stay on this path.
Yeah, it's interesting. You know, for me, I started out. I have a BS in finance from St. Joseph's University in Philadelphia, and I started out in finance as a financial analyst. And you know, right around September 11th, and September 11th, I think for a lot of people, you know, you were starting to reevaluate what you really want to do. And for me, I thought, you know, I really got a lot out of economics. I was scared to take that step to kind of go to graduate school for economics, because quite honestly, I wasn't sure what type of jobs I would end up with. So, but I did it, and I went back to school. I eventually got my PhD in economics. I started teaching economics at various colleges as I was finishing up my degree, and got a job at Moody's as an economist. So I was doing research economics for Moody's, writing blogs on right around the time of the financial crisis, and that led to I found a job opening at the institutes, and it appealed to me. It was for the Insurance Research Council, which is an arm of the institutes, and I learned a lot from that process. I came into the insurance industry with a different type of perspective. I learned a lot about insurance at the Insurance Research Council. The Insurance Research Council does public policy research on behalf of the industry. They had their own advisory board. It actually is very similar to RiskBlock in a lot of ways. And I learned a couple things through that experience. I learned, you know, the industry has a lot of trouble trading information with one another. I learned that, you know, data that you needed for auto injury research or research on uninsured motorists, you need data to try to study that. The industry has a lot of trouble sharing that information, and they're for good reason. They're concerned that, you know, they're giving up competitive aspects by sharing their information and their data. And it's interesting because, you know, when I look back on it, I think that that's one of the reasons that blockchain to me was an obvious solution, because of my experience with IRC. You know, but, you know, one thing led to another, and I ended up talking to our CEO about the needs, you know, from a market standpoint of looking at the industry more holistically. I felt as though it would be good to have a kind of an analytics department at the institutes, or a research department that's looking at market trends and that sort of thing. So I ended up there. Periodically throughout that process, I was teaching economics and finance at different schools, and I think that helped too, because I learned a lot about facilitating discussions. When I was teaching adult students, so I learned how to kind of facilitate discussions and not necessarily kind of overarch with, you know, lectures and that sort of thing, but listen to the students' perspective, because they all have really cool, unique stories to tell and different ways of looking at economics or finance. So I learned a lot through that experience. And, you know, one thing led to another where I would have never thought 10 years later, since I've started in the insurance industry, I'd still be in the insurance industry. But I've really enjoyed every step of the way here. And now with this RiskBlock initiative, we spot, like I said, at the origin of the discussion, we spotlighted a trend in the industry, and we're trying to meet our mission of providing knowledge solutions to the industry. It's just a different way of doing it. I've really valued working with the working groups that we set up here, because although I facilitate the discussions, like I was saying about teaching adult students in college, every time we have a working group discussion, I come out of the working group discussion having learned from peers, from my peers of folks at Nationwide or at Farmers or at Liberty or at Marsh. I'm learning every time we have discussions, and I hope that they are too. So it's a different way of providing education, but it is education, and it's definitely knowledge solutions, and we're definitely, in my opinion, with RiskBlock, fulfilling our initial mission of providing knowledge solutions to the industry. So it's super exciting. Probably a long-winded way of telling you kind of the story of how I got involved in insurance, but looking back on it, it's kind of interesting.
No, I enjoy that story, and I can vouch that the majority of people that I've talked to and I've interacted with fell into insurance, and most of those people didn't think they would stay that long. But it's, as you said, it's a valuable career, and now I spend a chunk of my time trying to convince youngsters that it is a destination, that it is a career choice that you can make. So that was a interesting take on your particular span through there. So let's stay on the personal side and end the podcast with a couple of personal notes, which is being in the position you are now. You're trying to get this new idea up, running. Probably have swarming with phone calls and emails. What tools or techniques do you use to stay productive?
That's a great question. We use Slack to communicate to our working group members. We're looking for actually a new tool. We're looking at Confluence and different tools to help with, just from a discussion standpoint. I don't know if you've ever used Slack before, but it's really cool. It's kind of similar to Twitter, but you can use it from a work perspective. It's kind of more permissioned version of Twitter, so you allow people in, but you can provide some insight. You can share documents, share pictures, and that sort of thing within. And that's been extremely useful for us because, quite frankly, you have all these varied parties involved in this initiative, and there's really no one place to go to talk and to discuss things other than our weekly working group meetings and that sort of thing. So to keep that conversation alive, Slack is a great tool that we've been utilizing. We utilize a lot of project management software. We have Reich installed here at the Institutes. We're looking into alternatives there to try to stay on top of tasks and that sort of thing. I think that, as we use GitHub for our code as we advance this out. So I think there's a lot of tools out there that we're using to try to make ourselves more efficient. But I would say that that's another thing we're learning about each time we're having discussions with our working group members about different tools that they utilize. So I think it's a great question, and it's something that we're learning about as we kind of move forward here. So if you have suggestions, please feel free to let me know. We're certainly open.
I'm trying to piggyback off of you. That's why we asked the question, because it's something that concerns me. It's as technology invades our lives, and as more people join the network, it's harder to communicate. We do use Slack over at both my companies, Insurance Nerds and Rethought, and I always describe it as a combination of text messaging and email. You get the best of both worlds all in one little simple platform, and so it does make communication a lot better. So I will put all of those on the show notes in case any other listeners want to check those out. And finally, books have you read that have been influential, not only in your business career, but personally as well?
That's a great question. So I have different tastes, I think, than a lot of folks out there. One book that I've read that, I'm very, very interested, from a more of a hobby perspective. It's one of the reasons I got interested in Bitcoin is just in economics in general. I like following what's happening in kind of the economic sphere and that sort of thing. One thing I should have mentioned with the different tools I use is I love reading on Twitter, different points of view, that sort of thing. So I'm heavily engaged in kind of discussions on economics and that sort of thing. One book that is related to that if anyone's interested in central banking, which probably most normal people aren't, but I am, and I feel as though that is underrated in terms of importance, in terms of our economy, the decisions that the Federal Reserve makes, regarding money supply and that sort of thing, I think are extremely influential, and they have large consequences. And I think a great book related to that topic, it's quite old, is The Rationale of Central Banking by Vera Smith. I've really enjoyed that book. I learned a lot. I didn't realize that, the United States had free banking. We weren't always under a central bank. And as you know, Bitcoin kind of has a lot of premises like that, and that's one of the reasons I kind of got interested in this space. So I figured I'd bring that one up. Outside of that, I like reading different types of books. Like there's a book by Daniel Quinn, kind of that describes, it has this interesting take on kind of mythical thinking on modern civilizations, on ethics, sustainability, that sort of thing. So those types of books, Man's Search for Meaning by Viktor Frankl, was really, really interesting. I like those types of books. And, I'm a big Netflix fan, so I would say that, from a book's perspective, I like to kind of read more serious stuff, but also like to kind of chill out and watch Netflix and that sort of thing. So big Eagles fan. So we're very pleased with the Super Bowl win, that sort of thing. So, but into the more serious stuff.
Off there. I think we should just end the podcast completely. Anytime an Eagles fan is going to talk about this particular Super Bowl.
Is that right?
Well, it's coincidental. The podcast we're delivering tomorrow has a conversation with me and Cooper Cohen, and we talked about the Super Bowl. I'm from New England, so unfortunately, I guess the better team won. But anyways, you can continue. Sorry about that.
You guys have had your fair share of wins, so it's time. I don't think the people in Philadelphia really knew what to do with themselves. We're so used to not having it go our way, so
the city.
You guys have had a fair share of rings, I guess.
Yes, the city survived, so that's good, and let's see if you guys can defend that title. It's really hard.
Absolutely.
Patrick, how can people reach you?
Yeah, they can email me at schmid@theinstitutes.org, or you can just look me up on Twitter.
Thank you so much for enlightening us on blockchain and the institutes and what you're doing. I had done some thorough research, but you actually really enlightened me in terms of what it is you're doing, how you're doing it, and the value that you're bringing to the whole ecosystem. So thank you so much for enlightening us.
No problem. Thanks for your time. Appreciate it.
Okay, Patrick. My guest this week has been
care.
Patrick Schmid of RiskBlock Alliance or the Institutes. Thanks again, Patrick.
Thank you.